Hey, this is Matt from InvestiQuant. Today is Tuesday, October 26, 2021. Before I get started here, I wanted to do a quick reminder to let you guys know about our webinar that is tomorrow after the close, Wednesday, October 27th at 4:30 p.m. Eastern Time. We'll be hosting a webinar, an educational webinar about short-term trading. So Scott Andrews will be joining me there, and we'll be talking about short-term trading benefits. You'll learn how short-term trading can really complement your long-term investing, why traditional diversification won't protect you when you need it most, and there's an interesting slide here that we'll be talking about why 95% of traders don't make it. So I think you might find it interesting if you're interested in short-term trading, day trading, like we talk about here in the Daily IQ. That is tomorrow after the close. There is a link underneath this video where you can sign up, register for it, and join us tomorrow if that sounds interesting to you. All right, now let's get started with today's Daily IQ. The market continues to go higher. It seems like every day we just push higher. We go to new all-time highs, and then we open up and do it again. So yesterday we closed up at new highs. We finished with a pattern that we don't see all that often. It kind of looks like a high and tight flag-like pattern that takes place. And when you do that, there's a market profile reference point called the point of control that ends up near the top of the session. The point of control just references the most traded price for the day. So we're going to use that piece of information in today's Daily IQ from our profile patterns library and set up a new study here. So let me go ahead and grab all four instruments. The setup is going to be based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now this morning, the markets are once again continuing higher, so we are going to add that information to the test. We are trading well above yesterday's close and above yesterday's high. So I'm going to go to the opening area, and I'm going to say open above prior day high. By definition, that's a gap up. You don't need to add that. You can if you want by clicking on gap up there. And then next, I'm going to go to the price patterns, and I'm going to say that we had another strong close. And to keep as many samples as possible, I'm just going to go to this new high section, and I'm going to say it was a 10-day high close. It was actually an all-time high close, but by doing 10-day, you'll keep a few more samples in there. Next, I'm going to go down to the profile patterns. This is where you can find market profile patterns, and I'm going to say that the point of control was in the top 25% of the daily range. So that's in the point of control placement category here, the POC placement. Right here, I'm going to hit equals next to POC finished in top 25% of daily range. And then lastly, I'm going to put it in a similar market environment. We are above a 10, above 200-day simple moving average. And now I'm going to click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when the prior day closed at a 10-day high and the most traded price for the session was in the top 25% of the daily range. This is taking place in a bull market above a 10, above a 200, and the next day it opens above the prior day high. Historically, we've got 46 samples of this in the S&P. We've got 71 in the NASDAQ, 43 in the Dow, 53 in the Russell. The win rate on the S&P is coming in at 61%. That means 61% of these have closed above the opening print for the day. For the NASDAQ, that's 55%, the Dow 58%, and the Russell 62%. So all the win rates are skewed towards the upside here. If we look at the average moves, the average win is larger than the average loss in the S&P. That is also the case in the NASDAQ and the Dow. The Russell is the only one that has had a larger average loss compared to its average win. So historically speaking, this pattern has been more favorable towards the bulls than the bears. And if you look at the equity curves, specifically this NASDAQ one, looks like it's been really strong in a recent handful of years here. This is the NASDAQ equity curve. So it looks like since 2018, it's almost straight up. Let me just look at this table below. So this is the S&P table. Past handful of years, it looks like it's been a bit stronger here in the win rates, but the NASDAQ was the one that really stands out. And past handful of years, past 5 years, looks like 2 out of 3 of those have been days that finished higher. Past year, it's been a little bit stronger, but you can really see that in that equity curve. So hopefully you found that helpful. Good luck today, and we will see you next time.